SEBI's nod to mutual fund houses to offer silver ETFs comes at a time when the commodity market is rallying and chaotic. And not to forget, right in the middle of this year's festive season. It thus seems that another investment avenue has now opened up for investors. When we say commodity and festivity, gold cannot not come to our minds. Along with gold, silver is also a part of the ongoing rally. Experts maintain that both metals can be used in investors' portfolio to diversify it. However, the two metals may differ in certain key parameters, which you should know about if you're planning to pour your money into either. In this video, we hear from Chirag Mehta, Senior Fund Manager, Alternative Investments at Quantum AMC, tips and inputs on diversifying your investment portfolios using gold and/or silver, and important points of distinction between investing in the two metals. So let's address the elephant in the room with SEBI's green signal to silver ETFs. What do you think is in store for investors now? And especially amid the festive season, could demand pick up?
So silver ETF, I think it's a good and welcome step taken by the regulator in allowing silver ETFs. Like gold ETFs, we have seen that they kind of very price efficient and pass on the efficiency. In a market like silver, it is much needed, given that you see high beta spread, concerns on purity, issues surrounding storage, all that, because silver is a bulky commodity at the end of the day. So overall, this will certainly help investors who are looking to wanted to buy from a investment perspective. It will certainly help them get that exposure, having the backing of physical at the same time not holding themselves. So it relieves them from all these issues that are kind of typical to a commodity which is bulky as like silver. So overall, I think it's a good and welcome step. We will see some launches around silver ETFs from the industry for sure. It's a good market. It's like a market of 6 to 12,000 crores, depending on the type of the year you're looking at, of silver investment demand in forms of coins, bars, etc. So it will certainly help translate that demand to some extent. Given that the typical demand comes from tier 2, tier 3 cities and it will take its own time to kind of get that sink in terms of they adopting the digital way of owning silver as opposed to them buying physical. So that will take its own time to play out.
Yeah, in fact, you mentioned digital forms. So now digital gold is, of course, doing the rounds and it's gaining popularity. Do you think there could be a similar trajectory for silver as well?
The issue with digital gold is today it's still not regulated. Right? So for a person moving from say physical to digital and something that's not regulated takes it again, it's more time in terms of they absorbing the stuff. So we'll have to see how it pans out on that front.
So, in this commodity rally, what do you think is shining more now, gold or silver? And what should investors make room for in their portfolios?
Yeah, if you look at, there is too much optimism in this rally. There is, hopes of economic recovery. And therefore, the commodity prices, given all the liquidity that was pumped in by central banks, are doing phenomenally well. In this backdrop, we would have hoped that silver would have done significantly better, but it's not. If you look at YTD returns, silver is trailing gold, and both are under losses right now this year, given the risk rally that we are seeing. But silver is even trailing gold. It's even more in a loss this year as compared to gold. If you have to see in such kind of markets when different commodities are at significant high levels, silver should have done well because that really tells you that industrial demand and which makes bulk of silver's consumption should be doing well in this at this point in time. But surprisingly, it's not. But it's surprising to see silver's not shining in this time as well.
So then, is there any merit to additional diversification? Say if someone already has gold, should they maintain that or add in a bit of silver as well? And in such a case, how much should the total portfolio allocation be to these two metals? Like, experts say 5 to 10% for gold. But if you add in silver as well, then how does the division sort of happen?
See, from a diversification perspective, I think gold is one which fits the bill, right? Gold is a great diversifier. As I've said, that silver, much of the use of silver comes from industrial uses. And when industrial use will increase, when economies are doing well, right? And that is where your equities will also be doing well, more so, because economy is doing well, therefore equities will do well. It kind of is in sync. So it doesn't give you the diversification because the underlying factors that drive both equities and silver are the same. Whereas for gold, it is very, very different. So gold is a better diversifier as compared to silver. Gold is a strategic part of your portfolio. Silver is a tactical part of your portfolio. Usually you have that 5 to 10% room in your portfolio to have that, what we kind of call it as tactical allocation or play money, where you kind of see opportunities and you move into those kind of markets. So silver is that kind of market. You need to analyze the demand supply dynamics of silver. And if it is kind of advantageous, you kind of move into that market. So it is not a diversification or a strategic play of your portfolio. It's a tactical play which kind of moves on and off.
In case of either precious metal, gold or silver, do ETFs still score over other forms of investment, or would you advise different avenues for each? Like some investment for avenue for gold and some other investment avenue for silver.
So if you look at the gold investment, I think gold ETFs or any silver ETF will score significantly when it comes to you taking exposure to that metal, because again, it brings you that price efficiency, it gives you that diversification, it gives you that no hassles of purity, storage, liquidity, all that will bring the along with it. So it's advantageous in that form. But if you were to any other form when it comes to commodity, it's kind of slightly risky because there will be issues of storage. Purity is always a concern. And there are tax issues as well when you go and buy the physical commodity. So ETFs are really a better ploy in a better way to get that exposure.
Any specific advice that you would want to give to investors who are actually planning to dip their toes into silver and go the silver ETF route? So, for example, are there any lessons that they could draw from gold ETFs that they could apply to investing in silver ETFs as well?
So lessons from gold ETFs is, it does give you that efficiency, to look for that efficiency more. If silver ETFs are able to bring to the table that efficiency that gold ETFs have offered, given again, they will have to craft it very nicely because the bid-ask spread, even when you are transacting at the wholesale level, are high in silver. Storage costs are high because a bar of gold to store and a bar of silver to store will entail the same storage cost. So bar of gold is 50 lakh rupees, whereas a bar of silver is much lesser than that 50 lakhs. So the storage costs are so once the silver ETFs are designed, they'll have to craft these elements in a much more suitable manner so that they bring in the efficiency. So I think have gold as a strategic element, 10 to 15% of the portfolio. There is evidence in terms of hard numbers that it kind of reduces your risk significantly and enhances your return, or does not diminish the portfolio return and at the same time reduces risk significantly. Whereas silver, use it as a tactical play, not a strategic play. You need to differentiate. And when it comes to your investment, be it either in silver or gold, it has to be through these efficient routes. Otherwise, you're losing big time when it comes to various other costs that kind of encompass with physical holding of that commodity.
The sort of caveats and watch outs that come with buying physical gold or say jewelry or bullion, those apply to physical silver as well?
Yes, physical silver, usually silver ornaments are being used. So there are people in rural areas that kind of also buy silver ornaments to a large extent. But yes, there will be purity issues. If they are in gold, they will also be in silver. Silver, again, being lower priced commodity, the issues are not that large as you could encompass in gold, but there are still purity issues when it comes to silver as well. So at any point in time, you have to differentiate whether you are buying gold or silver. Is it for usage purposes, consumption purposes, wearing purposes, or is it for investment? For usage, for wearing purposes, you don't have an option. You have to go through jewelry. But when it comes to investment, it has always to be the efficient choices that you make.
Hopefully, you have drawn some lessons that can help you invest and purchase better in this rally and the festive season. Don't forget to check out our complete festive season money guide curated exclusively for you right here. Stay safe and stay tuned with us for more.